Hello again, YouTube. Welcome to your average traders. We're just doing a quick update in this mad time of excess volatility and mad market movement. Give a quick update on what we're doing and what's happening with these markets right now. How's it been going, Jason?
Yeah, well, just the first thing that we'd just like to say is we're all going through something in the market. In all the paper gains that we see, can't detract from the absolute craziness that's going on to the people who are actually living out in Ukraine. So our hearts go out to all of them, and I hope they stay safe.
Totally
Yeah.
concur. Yeah. It's been crazy. There's been about over 100 missiles launched. There's been a load of deaths so far. The Chernobyl power station has been taken over. It seems like the speed at which Russia are going into Ukraine, they're going to pretty much have it taken over in a couple of days. So, it's going to be very swift. That's what it looks like, and it looks like that's what the market thinks too, because we have seen quite a nice bounce from the carnage we saw pre-market, where the Dow was down like 900 points, the S&P was down like over 100, the Nasdaq was down 450. Over in Europe, we had losses of over 5% in the CAC, the DAX, the Indian stock market was down over 5%. So we were seeing a lot of carnage pre-market. To be honest, thank the Lord, we have seen a bit of a bounce as some of this bottom fishing or short covering or whatever it is that has, helped. Some of this technical levels also probably helped as we're seeing quite a bit of a turnaround, especially in these tech names. We're seeing quite a broad divergence. So I'm looking at the Dow right now. It's still down 430 points, but the Nasdaq is up over 1%. So there is quite a big divergence there, as some of these really goosed up energy names are giving back a little. I think we've seen the USO, oil, give back a ton from the high. It had breached $100 on WTI, and it's now down about 6-7% from the high. It's a lot of these commodity and energy names are the ones giving it up, and all these battered tech names are the ones that are getting a bit of love finally. So, that's been good.
Yeah,
Well,
and you see names like Lemonade trading at just, like, was it 1.2 times cash balance, I read?
yeah. I mean, you look at Google, was about 500 points off the all-time highs, and that is after they goosed everyone in from their 20-for-1 stock split, and now it's trading. I don't even know what it's trading. I think it's trading just probably around 2,600. Having hit almost well over 3,100 at the high. So I mean, that was a bit of a painful one, seeing such a name like that drop 500 points pretty much from there. So clearly, the market ain't in that euphoria rampant mode it has been in the past couple of years. And seeing Cathie Wood's ARK fund basically take out 2 years worth of gains, but evidently it actually did bounce off a trend line low. So a lot of Cathie Wood's stocks, the ones that should be averaged down for the last 80% on, are rebounding a bit, which is helping
But
her fund a
we
bit.
saw that she sold the last 225,000 of her Palantir shares
And
yesterday.
I was very happy about that, because I went long Palantir, and the fact that she shorted it gave me confidence. So she sold about 1.2 million shares, and so it was a bit crazy.
More Nasdaq stocks are at their 52-week low than during the peak of the dot-com bubble. So that's just something to think about right now.
Yeah.
As in, like, how much lower can they go? And I think the fear of war was worse than actually going to war now. So it's like it's now days, it's done.
But
it's early days.
We don't know how it's going to transpire, but as of now, the market has sort of reacted not as bad as we feared. Like the Nasdaq futures have actually hit a low. I'm just looking at 13,026 more or less. It's now 13,638. So it's bounced 630, like almost 4% off the lows. So that's been, again, is it a dead cat bounce? Because every time we've seen these bounces, they've just come off. So, it's hard to tell. But I mean, I just want to quickly before we discuss what we've been doing, what our take is during this time. Just want a quick brief overview of just a recent speech by Joe Biden. He spoke with the world leaders this morning, and he set out a bunch of sanctions. Basically, the sanctions are included on major banks, exports, and elites and their families. And then the US is preparing to do more. And then it's on the table to sanction President Putin personally. So that is what Joe Biden did come out to say. He said he would limit the ability for Russians banks and Russians in general to deal with dollar, pounds, yen, and the euro. So it's really stifling them on the financial front and where it will hurt the most. And it's also trying to limit the amount the Russian army can expand by, taking really limiting their access to financing. And they talked as a collective unit. This is not just the US; it's just a whole broad about 27 nations, which make up about half of the world's economy, coming together to do all these really harsh sanctions on Russia. So, firstly, do you think Putin even gives a crap? Because I mean, it doesn't seem like all the threat of it before did much to deter him from doing what he's doing. So, that's number one.
Yeah, I mean, this is the thing when Biden said that Putin has much larger ambitions than Ukraine. Is that true? But also, in terms of sanctions, once the missile strikes are actually occurred, right? Is it worth putting in sanctions? It's not going to stop it once it's actually happened, right? What's the deterrent now? I mean, there's obviously talk about the, banning Russia from the SWIFT system, but I don't think that's going to happen.
See, the way I see it is a deterrent. I feel like Putin wouldn't be deterred by anything, but it's how much will the Russian people really start turning on him, and if they do it, because right now Russia does, they have a pro-government press, pro-government news station. So generally, Putin's looked at in a very good light among the majority of the viewers, well, so it seems anyway. And the question is, if it's really starting to affect the Russian people and the economy, and the real people are starting to really suffer, and the country is really being affected, I could imagine like the country will start rebelling against Putin. Maybe I don't know. Like I feel like that is the main way where Putin can really start feeling some pressure, because by itself, I think Putin has he's just very strong in that regard, and he just doesn't
Of course.
care. Yeah.
But the thing is that I think currently there are some protests going on in Russia, but they're kind of few and far between, I've been told. And being an authoritarian state, you're kind of in the position where if you do, protest, the likelihoods that you're going to be in jail. Is it worth it? That's the thing. So even on your point where you say that, people are going to start to rebel against Russia, right? I mean, they're risking a lot to do that. And is it worth it? I think it's going to be from not just your average John Doe or John or Vlad Doe or whatever in Russia that's going to make the difference. I think it's going to be the elite, the wealthy, because the economic picture in Russia is actually much worse than it seems, because the market was down like 70% when you factor in dollar terms, right? Yeah. Because the ruble dropped, and obviously the stocks have crashed as well. So that's huge, and I think that the economics, people who are invested in, who have a bit of sway with Putin, can maybe potentially pull him back. But one thing that I just didn't understand is he was saying, "I'm going to go." He was posturing for so long, and then he invaded. So it kind of gave everyone time to prepare, which I don't know. Normally, don't you just, like, if you wanted to attack, when you just do it quickly?
Biden said it in his thing. They've seen over time, because I think a lot of people didn't actually think Putin would go ahead with it, but they saw the mobilization of hundreds of thousands of troops across the border, along the Ukraine border. So it was plain to see that you just don't do that for the sake of it. Like, it was all there. It was well telegraphed what they were going to do. I think they're just trying their hardest to not start a global war, and so trying to deal with this on an economic level. And so obviously Russia doing what they're doing, I guess we'll see over time the true impact of what actually happens, whether it does lead to another world war. We all hope it don't, but right now we are seeing the markets, and just seeing right now the S&P had just turned green, pretty much raising a 100-point drop. And this reminds me of just a couple of weeks back when we saw that 800-point drop and down, then we just ended up on the day. So we're seeing this sort of pin bar candle again, this really big candle with a huge tail. And so maybe that might be a sign of a short-term reversal. I don't know. So, I mean, what's your plan now? What's going forward? What are you looking at doing?
Well, this is the thing. I mean, I'm out of money. I've been buying I've been buying Tesla on the way down, just adding to my position. But like I said in the previous pod, in terms of my options positions, I've been very little in terms of activity there because it's just too volatile. And with the VIX just on a yo-yo up and down, you're kind of at the whims of all of this craziness that's going on. So pretty much bag holding. However, my cost basis on a lot of the stocks are less than where they are now. So I'm not hurting too bad, but in terms of paper gains, yeah, it's pretty brutal. I mean, if I just look at Tesla, I think, when it was down this morning at around 700, it was down 44% off its high of like 1,240 or something like that it was, right? So that was like it's been like one of the largest pullbacks in Tesla stock history. It's probably for most stocks, it's just been an absolute crazy time. So
it's been in line with it right now. I'm looking at it right now. It's up 1.6%. So it's been it's been about an 10% move off the low, more than that from the pre-market low, which has been good. But I mean, it just shows it. Like I was just thinking about this the other day, where pretty much the market has reeled us in over this last couple of years into this euphoria state and got us into this, even though I've spoken about it numerously, that these stocks are crazy, they're so overvalued, but you just see them go up day by day by day. And then no matter how much experience you've had in the past, and shorting just does not work because shorting hasn't worked for 2 and a bit years, you get burned and you feel like the only way you play it is to just get involved. And then what happens? And then eventually the bubble bursts, and this is exactly what's happened. And so many stocks virtually is wiped out all the pandemic gains. We've seen, again, like I just mentioned earlier, ARK's fund at the low point today wiped out 2 years worth of gains. So it's just been really, really difficult. And but again, it's about what people are willing to pay. And in the past couple of years, when we had zero interest rates, ultimate accommodation, the multiples that these companies were commanding were just huge. And now it's all getting back down to earth, where literally we've seen how many tech names now. And we just had Wayfair had a massive move lower, but it's reversed. But where we've had 25-30% moves lower, and just on slight misses like Facebook stroke Meta is a prime example. And a lot of those are not recovering. It's not bouncing as you would expect. PayPal's another one. It actually went below 100, which has been just a disaster, that one.
What a disaster.
Yeah. So, I mean, to
like
be honest,
we were saying earlier, it's kind of, this is the dot-com crash, but just in the way that things have been manipulated, we're in a state where the indexes aren't down as much, but individual names are just, absolutely completely trashed.
Yeah. In the dot-com crash, basically we had a broad-based tech sell-off. So we even saw Microsoft getting smashed off the highs, Yahoo, which was a big juggernaut back then, getting smashed. Now you're not seeing the huge caps getting smashed to the level of some of these other stocks. So it's been a bit different, the dynamics. So you don't see it reflected as much in the indices, but behind the scenes, the carnage is real.
So Rajan, what's the play right now?
Well, I mean, like we mentioned earlier, we did see what seemed to be a bit of like a puke this morning, where we did see sharp declines across the board in a lot of these major indices. And now we're just continuing to rally up. And this is one of the biggest turnarounds I've seen. I mean, it's coming in theme with 2022, to be honest, with the extreme volatility. I just want to quickly just bring up a chart just to show the S&P 500 futures and seen just a couple of notable things in this chart. So this is today. We actually reached a low, which was just around 4,100 in the futures, and we pretty much rallied 150 handles. So the last time we had a move to that sort of extent is on this day, which was January the 24th, and that was the last time we had this huge move lower, and then we rebounded the whole thing. And then the next day was followed by another down day, but it didn't take out the lows, and then we consolidated around the midpoint of that bar, which was there, and then we rallied up. So now we're here, we've hit another low, but we haven't quite reached a low that was reached back in May last year. So the thing is that technically we can still reach that for, around the 4,000 mark. But I think near term, if you look at the move we've had lower from this high, which was 40, let's call it 4,600, all the way to a low of 4,100. So that's about a 12% drop we had in virtually 2.5 weeks, which is pretty mad. And again, same like we did on the 24th of Jan, we've had a pin bar. So we've got a small body, a huge wick. And so I think just based off pure charting, forget about any fundamentals, I think we have put in a short-term bottom. So I think we can sort of get back towards this line, but we've got this trend line that is coming down lower here. So I think near term, we could get back to around 43.50, 43.20. So just purely on a technical play, that's where I'm looking at. But I wouldn't be surprised if we, start off lower again to tomorrow. And I guess, a lot of the headlines, what's happening in Russia and everything like that, it's going to obviously have their play. I think the Fed rate hikes have all been pretty much priced in. The Fed have all come out saying that this Russian move ain't going to really, alter much their stance in terms of rate hikes. But
the market is pricing in a 13% chance of a 50 basis point rise.
I think 50 basis point is coming off the market.
Out of the question now.
I think that would be a bit punchy given the geopolitical crisis going on right now. So I think 25 basis point is a near uncertainty, obviously, but it depends. It depends how much this inflation, how much it keeps on going on, whether energy prices start to go down a bit. So I guess we'll have to watch out for that and see what actually happens. So I'm sure I've been slowly adding in a minor amount to all my positions, but the thing is I'm just doing it really small, just subtly adding in. I'm not going in hard or anything like that. So that is just where I stand. I think right now going in too hard, too quickly, or too much, no one knows where the bottom is. And the thing is that if we look at a long-term chart, this could keep on going. But I mean, or maybe not. And the main thing is you just want to keep yourself solvent rather than
then trying to get the gains, right?
Yeah,
that's
trying
the
to get
main
the
thing.
gain. During this time, it's all about capital preservation and just staying in the game. And there's so many people that are probably over levered, going in big, betting in hard, overdoing the options, and just killing themselves. Like I've been through this now. I think this is my fourth one I've been through, and at every time in hindsight, you're like, damn it, I should have bought it. But the thing is,
while you're going through it, the emotions really take control. So the only thing that I would have to recommend in this type of situation is, you have a defined written down plan. So you would say, if Apple hits this level, I'm going to buy. Take the emotion out of it. Just keep it pure logic, right? The markets can always go lower, but if you've done your fundamental analysis, that the company's worth a certain amount, and you're happy to purchase at a price, then that needs to be the discipline. But the thing is, we're all humans, and I remember waking up in the middle of the night, and then I saw reports of the Russian invasion, and I couldn't sleep properly, But even though it's just I knew I wasn't going to sell out, but then just seeing that massive paper loss, especially in pre-market, I was like, holy moly, it was just insane.
I mean, some of the reversals today, I'm seeing, let's start off with Tesla. Tesla's now up 4%, been down like 6%, 7%. I mean,
it was oversold anyway. So
the thing is, Upstart had some fantastic. That's one of the plays I got in. Well, I've been involved in Upstart quite a bit, but they had blowout earnings. We went from about just over 100 prior to earnings to 145, and its downturn took it back to 100 and something this morning. So I got long Upstart, and Upstart is up like 17%. So I'm sort of considering whether just to take a 17% gain in a day and just be done with it. But the thing is, those earnings were so good, and it really went against the grain of some of these other lending names. So Upstart has had today like a 23% swing, which is just wild. And there's many stocks like that. In fact, if you actually look at it in general, it's like I was saying, it's all the stocks that have been smashed the most, which are rising the most, and the ones that have been bid up, like these energy names and oil names, are the ones that are getting hit the most. So we're just seeing a massive unwind of the recent play that's been happening in the market over the last couple of weeks. So, I mean, as everyone can see, you can all follow the average trader portfolio, which is defined option portfolio. like Jason said, it's very difficult to be disciplined and mechanical, but when you have defined spreads and defined risks, it sort of takes that emotion out of it a bit because you already have your defined plays. So a lot of the plays that I got on, obviously they're going to be hit pretty bad, but I already know that my max risk is already defined. So even if the stock drops 100%, I'm only losing a certain amount. So that is a way to, because it's very easy to just, bag hold a stock. And then, like I was saying earlier, the thing is, in these 4 times prior, in hindsight, you can always say, I should have bought there. But in the time, you just don't know where the low is. So you might think, right, I'm going in the low right now, and then it drops another 10%. It might drop another 15%, or it might not. So it's all just potluck. We don't know how much unwind is happening. But all I can say is short term, I do think we've put in a bit of a bottom. This pin bar, today we had the sell the rumor, buy the fact. It was the opposite today. So I mean, we've had all of this market downturn in preparation of this whole Russian invasion. It's happened, and the market just done the total opposite. Oil, in the morning was over $100 a barrel. It's now 7% off its high. So this is how the market always works. You go, right, here's the war, I'm selling. And then what does it do? Just goes back up. So it's like, I mean, there's only one thing that's really helped me get through the stress. And it's this, it's like this thing that you just put on your head and you just do this. And this stuff is called my Wusa, just Wusa calming. If anytime anyone is stressed, just get one of these, $1 from Walmart and you're good to go, so.
So this is an interesting diagram, which just shows that 5 of the last 5 times, the stocks end up bottoming just before the invasion. And it seems to be right now we're just living through that at the moment. Who knows what the future is going to be, but buying the invasion historically has been a winning play. We've just had convictionless rally after convictionless rally. However, the thing is now, I mean, not to take away from all the hurt that's actually going on right now in the world, but if you're just focusing purely on the economics of it, we're looking at, a period of time where we've got high inflation and little the Western governments can really do about it. And so in terms of these sanctions that they're talking about, especially the SWIFT revocation from Russia, they're talking about it. They could push Russia to move to some kind of crypto or other settlement layer.
I know, because Russia was against crypto and at one point looking at banning it, and now they sort of reverse course. And I think, but I mean, it is very interesting. Like you say, I think the thing about this one is that this underlying move down hasn't actually really been because of Russia. It's been because of interest rates, and now Russia has compounded it. And so,
but also in wiping out a whole bunch of paper wealth that was created in 2020, 2021. So we're in this situation where there might be less consumer confidence. And if that's the case, we get lower competition for goods and services, and to hopefully bring down the inflation rate. This might be the catalyst that Western governments were looking for. Just the uncertainty of it all is really what's, causing a lot of the issues with the market just not being able to hold any kind of rallies. What's your thoughts on that?
Yeah, I mean, uncertainty is the stock market's worst friend. Stock markets hate uncertainty. The thing is that the past couple of years has been, it was a massive bubble. I mean, the amount of companies making big losses, but just rally like there's no tomorrow. And the thing is that now I think a lot of these are overdone to the downside, and it's just the stock markets are always hits extremes. The stock market's a great barometer of just emotion. And when it goes to the upside, like people couldn't wait to buy Peloton at $160, and GameStop is going to 1,000, and AMC, that's I'm not going to sell AMC until it goes to 1,000, even though I'm like, but do you know what $1,000 means for AMC? That's $1 trillion market cap. No, but the amount of shorts, like the biggest thesis that a lot of the trades were made on during this whole time is the short ratio. No one cared about what the company did or anything behind it. It goes big short ratio, let's go long. And the thing is that now it's going back to where a lot of companies are going to really be whittled out by actually how well they do, and earnings are going to, as this year goes on, I think there'll be a lot more fundamental based moves rather than a lot of this meme stock behavior. So I think confidence generally, because when things happen to such a in such a fast way, you obviously get knocked back a bit. You know, everyone was the professional and the stock guru in the past couple of years. You know, someone that started in 2020 and all of a sudden is a stock market guru. Thing is that I've been doing this for a long time and still I'm not a stock market guru. But the thing is that all of these guys all of a sudden starting their own Discord chats, paid services, and you know they're the next thing. And then what happens is it just you know things go back to you know reality. So I think eventually we will you will have a lower you know we'll sort of settle down a bit more, but it all depends. If it goes how the market thinks, and most people think this Russia this whole thing will sort of be put to bed, there will still be tensions, but as long as it doesn't lead to a World War III, I think we are good to go. But if all of a sudden, you know, other countries get involved and it starts to become a big world war, then I think this is going to go to the shit. So we just got to see how it will works out. But the thing is that I'd rather be a buyer here than a seller. But then again,
yeah, definitely,
I would have rather been a buyer 100 points higher than this and 100 points higher than this. So the thing is, you don't know where the bottom is. But you look, like you say, one of your, you know, is just have to try to pick out the good fundamental companies with the good.
You know, high growth and high profitability.
Yeah, high profitability. But clearly, the biggest thing is people are not willing to pay as much for this high growth as they were a year and a half ago. So that is something to bear in mind. So the thing is, it's just what multiple, you know, you try to compare it with the index, with the sector. And, you know, if it's like fairly valued compared to its overall sector, but yet growing much faster than the overall sector, then, you know, that could be a good buy relative to the sector.
So now the question is, if you aren't in the market and you're listening to this, would you get in right now? I think it's a good time, to be honest, to start nibbling. I'm not saying throw your whole or everything you have at it, but some of the valuations are super cheap. And it's, you know, right now, the market's on sale. It's just like, you know, you're going into a Prada shop and you're getting so many stocks at 50% off. Not that it was ever worth the full RRP in the first place. So you have to always keep that in mind. But a lot of these companies are just trading so low that it's kind of impossible to, I say that with a big asterisk, to lose money in the long term. You just have to be able to ride the volatility that's going to be coming up in the next couple of months.
I would definitely say nibbling is the way. I just think one section of stocks is the SPACs. We talk about good old friends of SPACs, but SPACs in general have been single-handedly destroyed to oblivion, where we've had some SPACs down 90%, 95%, but some of these are actually making money and they're decent companies, but just as a basket, they're getting destroyed. And if you can whittle out the good SPACs within this, I think there's some great value in some of these SPACs. Like a lot of them are garbage and they deserve to be where they are, but some of them, you know, they're trading $2, $1, and you know they're making profits. That's more than, you know, a lot of these other companies. So that is a sector that I'll definitely be delving into a bit more. I'm looking at one of the names that I said when we done our first video of this year was Moneyline. Moneyline is like $2.30. So I'm waiting for their earnings to sort of see, you know, let's just see. It seems very cheap to me at that valuation. Definitely. So I'll definitely be looking at that.
As it's been quite a while since these SPACs have actually hit the market, you know, you can really see their earnings reports come out and seeing the trajectory of the companies. And Rajan, what you were saying, you know, a lot of these were hugely overvalued when it hit the market. But now we're at stage, like just say Clover, it's obviously down from 12.50. Yeah, they had earnings and now they're up like 21% today. So you can see like some of them will grow into a valuation. If you were picking it up in the twos, you're doing great with those type of companies. But obviously, buying when everyone is super greedy is not always the most sensible thing to do. Now we're at the situation also on a different topic where Russia, you know, if they getting these sanctions from everywhere, you know, you have to thank innovators like Elon Musk, because the whole American space program was relying on the Russian Soyuz to take them to the International Space Agency. But luckily the only one that can take a good payload to orbit right now and dock with the International Space Station is a SpaceX, and that's a US grown company. So like, and
I think
also we've
that
got
that is the
yeah
theme, trying to
yeah
become energy independent, gas independent,
yeah
trying to not rely so much on Russia for all of these
yeah.
things. So
And
definitely,
then also, yeah, not only on Russia, but when you look at companies like MP Materials, getting all those rare earths from the States is good. They're getting government support as well. So when you're looking at those type of companies, I think that those type of themes with independence and not reliance on a certain state, yeah, it's great.
yeah. Well,
Yeah,
hope you got some good valuable information. It's definitely a tough time to
yeah,
trade right now through the volatility, but that's also where you get the most opportunities. And I'd
yeah,
rather be buying down here than buying it in a bull market at some crazy valuation. So
exactly.
although it's scary at the time, but again, the key is to stay small, and don't over leverage. And I think that's the best play. Has been the message all the way along. Please like and subscribe if you liked what you saw, and if you can keep a track of the portfolio, it's going to be in the description. And yeah, we'll
And we're not getting enough comments. Can you please comment? Let us know what you liked, what you didn't like, and other thoughts on how we can improve. And we'll see you guys in the next one.